Hi there, traders. Welcome to the webinar. This is a live webinar with Admiral Markets. My name is Chris. We're going to be taking a look at finding trade setups with high probability, and that will be focusing today on moving averages, one of my favorite tools, in fact. Very useful, not so much for like crossovers, maybe that is used by traders that just start looking at the markets. No, not for simple crossover entries, not at all. Those not something I use. But moving averages are very useful for other things: support and resistance, direction, momentum, and just kind of the general psychology in a way, or gives you a roadmap of what you can expect from the price action. Basically, what kind of path of least resistance can be found, and the moving averages are very useful for that. All right, but before we dive into today and take a look at the charts, first of all, be aware of these two disclaimers. The first one explains the fact that the webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out if it is suitable for you. Also, second of all, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so there we go. If you're interested in knowing more about moving averages, feel free to go to education and then click on articles and tutorials. You'll find a lot about that there. Also in the Zero to Hero course, Forex 101 courses, you'll find more info about moving averages. And that's just, of course, part of this, what you can find. Analytics, there you go, lots of things to discover. But also, if you're looking for more tools and information, MT4 or MT5 Supreme Edition plugin, lots of great stuff there with extra features. All right, so definitely take a look at that. So with regard to the Forex market, then we can take a look at some other instruments and markets after that as well. Of course, feel free to reach out to me, write the chat, ask some questions, and basically, of course, indicate which currency pairs are interesting for you, or other instruments, CFDs, stock indices, commodities. Just let me know. Webinar will be a little bit shorter than usual, running a little bit a little bit lower on time today. So just feel free to reach out a bit sooner than at the end. All right. And thank you, ZT. Also wish you the same. Happy Thanksgiving for those that celebrate that, and appreciate your kind comment there. Very nice. Thank you so much. That's really nice words from you. And Bennett and I definitely always appreciate all of these comments, and you know, definitely very much. So great stuff. Now, with regard to moving averages in euro dollar, I think we have a pretty good example of what just happened with the euro dollar and how moving averages can provide support. Sometimes you see a long-term moving average. I actually use more moving averages than that. I use a short and long term. I use 21 EMA for short, 144 EMA for long. Nenet likes 89 EMA, for instance. So I don't think the numbers are really that important. Both Nenet and I tend to use Fibonacci sequence levels for moving averages, but if you like the standard round levels like 20, 40, 50, 100, 200, I don't think there's anything wrong with that either, right? I don't really think that the numbers are that important. I just went along with these, and there's no reason to change them. But I'm not saying that others are worse. In fact, I've seen studies show that typically moving averages, SMAs and AMAs are profitable when when you use them. EMAs a little bit more. In that study, typically 20 to 40 EMAs are very, very good for that. Um, but the differences are small. They're just very good tools in general. But you got to know how to use them. And one of them is the 144. This blue line, basically, by the way, the blue line in the middle of the Keltner is the same as a 21 EMA, almost the same. So really, you can use the Keltner in two ways. You can use it for the Keltner channel support and resistance, but you can use the middle line as an EMA as well. So that saves you one indicator. All right. So and the Keltner channel, as we discussed yesterday, is part of that MetaTrader 4 Supreme, or 5, by the way, MetaTrader in general, Supreme Edition plugin. So you can see that the price basically, as it kind of bounces at these moving averages, is giving us very valuable information. And the information is basically whether prices are tracing within a downtrend, continuing within a downtrend, is it reversing, is it continuing with an uptrend, or retracing with an uptrend? And it depends on not only this time frame, but multiple time frames. Here on the 4-hour chart, I was looking for a bounce at this area. One of the reasons was because I was expecting a wave 4, so the moving average was a factor in that analysis. And indeed, price bouncing off the long-term moving average, and I'm in a long on this $0. All right, and I was thinking about long already here. I waited a little bit and entered actually when we had the breakout candle itself. $Euro is moving up now, but just generally speaking, you can see how the long-term moving average helped here. Now, I'm not saying that the long-term average is the best for bounce or break spots. I think actually the 21 EMA is a bit better, but it's definitely generally speaking, a very good level to reckon with as a, let's say, as a larger retracement within the trend, right? So we have a big push above the 144 EMA, price gets back to it, bounce spot, right? And I'm not, what I mean with that is that it is not the EMA itself that is necessarily directly the bounce spot. I mean, it's more like an area, right? It's a zone of where price could bounce, a zone where price could bounce. But eventually, if price does break through it the second, third time, then a bigger trend in the opposite direction could happen, right? Here we still have a bounce. Here we have a bounce. We have multiple bounces to 144 EMA. And here we have a break, and here we have a break. So 144 EMA, very important for me, and how price responds to that 144 EMA. It's really very important for that long-term trend. If there is a trend, because if price is doing this, we can also consider that a range. If price is kind of breaking above and below it, and the long-term moving average is in the middle. If the long-term moving average is in the middle, then it could actually be in a range. So high probability setups, what are those? Well, in my view, one of the high probability setups is when you have a huge upside and then price gets back to that long-term moving average. That's very high probability setup in my view, right? Here, uptrend, gets back to the 144 EMA. So definitely that helps. Now this is not a high probability setup in my view. I had a bullish vision earlier in the morning, and as explained maybe already in my previous content, maybe you picked that up already in the past, yesterday or Monday. But so my vision was bullish, but it's not that I would say that this was necessarily a very high probability setup. But it was worth it for me to trade it to the upside. But I would not say it was a high probability setup. It was a decent setup. Slight difference there, in my view. But so yeah, that's basically. So the 21 EMA is also important, but it's more, in a way, if you look at these upsides, like these are such a big upsides, right? That when price breaks above the 21 EMA or bounces off the 21 EMA, there could be kind of like minor continuations within that uptrend, right? Like this. And you can see that the 21 EMA does a pretty good job of holding that. But eventually, price breaks below the 21 EMA as it retraces back to the 144. All right. So, my trading plan is very much built around moving averages, very much built around patterns and oscillator, and understanding where price is in that roadmap and trying to see which trades make sense. So that's how the 21 EMA could be of use. So if, for instance, you got multiple high probability setups that could be interesting, of course. reversal setups like this are, in my view, not high probability because the price is, the moving average is below them. Doesn't mean necessarily that those trades are not good. I'm just saying that they're reversal trades. There's always a little bit more risk to those. Um, but basically, the move back to the 144 EMA or maybe the first retest of a 21 EMA, those are probably the ones with the highest, the best probabilities, in my view. So all right, let's take a look at some other pairs then. Here you can see pound dollar. Really, it's moving up, but resistance is very close by. I think it could pop up, as I said yesterday, up to that resistance. Is doing that as we speak. I didn't trade this. I wasn't a big fan of trading it. It did seem like it could pop up though within this range and test that resistance. But if you look at the moving average, long-term moving average is flat. Price is oscillating around that. So, from this perspective, I think that the upside is limited and it could be a range trade. You look at the moving averages, it's range environment at the moment. Not only, of course, the moving averages, but the tops and bottoms. So nothing really changes on the pound dollar. Your dollar target, I think, it depends what kind of risk and trade management. Of course, it's always a little bit personal, but let me say what my target is. My target is 119.25, but there is an R1 here at around 118.80. So I think anywhere around 118.70 up to 119.25 could be, an area to think about. Now, the first real resistance is up in here. It's not something I would aim for at 118, maybe, 118-ish. It's not something that I would really aim for, but it is something we need to be aware of that does exist, and it could create a pause. So I just mentioned that because it does depend on, everyone has their own way of trading it. So this could be something to think about for some of you, depending on how you traded this exactly. If you had a very tight stop loss and you're already up, a 3-4 to 1 trade, I don't know, just reward to risk, there's nothing wrong with grabbing profit there, right? Either. Uh, just indicating. But I do expect that ultimately that price will maybe hit this level, pause, and continue. That I think is most likely at this moment. So I would be aiming for a little bit higher. I'm aiming for a break of this top. I think that is likely at this moment. All right, dollar yen broke this support trend line. It didn't make the upside to the R1. I was indicating that this trend line could give a bounce or be used as a break. We had a breakout candle here, in fact. That's not a breakout candle, but it's a candle that is threatening its support trend line with a close near the low. Then when that happens, a break is very likely. The next candle did break through it. So perhaps some of you traded this. I didn't trade it, but maybe some of you did based on the analysis that was done by myself yesterday. Perhaps, right? If not, no problem. But this is what the formation I was kind of looking for a breakout to the downside. If we would have had a bullish candle, we could have seen the R1, I think, but we didn't get it. We didn't get the break either here. So continuing to fall. And I think it was a decent probability because basically price was moving away from these moving averages and price was aligned below these moving averages. So I think it was a pretty good setup. Some traders are warning for 200-day moving average and daily forming double bottom. And from my perspective, the next target is this 50 fib, from my view, which is around 111. That's my view at this moment. But double bottom is all the way down here. That's still pretty far from here. If you're talking about this bottom, I'm not sure. But are you talking about this bottom, Paul? Perhaps this one with the blue circle? Okay, it could, and you never know. Of course, support levels are always something to reckon with. However, in my view, Double bottom is only present if there's actually a reaction to it. For the moment, price is threatening to break, and I would only think about a potential double bottom if price reacts to it. For the moment, I think that it's just a channel, and we could see a reaction like this, like a bear flag and a break. So for the moment, I would not think about it. We had a reaction here already at the 38.2 fib, which was more or less a confluence with this bottom, in my view. So I think that this breakout will lead to more, substantial push down to the 50 fib, personally, in my 2 cents of analysis. Uh, One thing though, if you are scared of this bottom, I don't think it does make sense to trade it here anyhow. The better trade was up in here, right? So whether you consider this an important support level or not, I don't think it makes sense to trade it here. What I would be looking for is today's daily candle. And if it closes something like this, a retracement tomorrow and a continuation down to that 50 fib at 111, I think would be a probable setup in my view. If we get a big wick at this bottom, then maybe the support trend line is indeed providing more headache than I would expect at this moment, right? But then in that case, if we get a big wick on the daily chart, then the market is telling me differently. Then the market is saying, hey, Chris, you should pay attention to this level. Price is reacting to it. So for the moment, I'm expecting a bearish candle like this and a continuation in this week, maybe next week, down to this 50 fib. And for me, the breakout was either this or this. That's what I was looking for. When I was talking about it yesterday, this is the formation for bearish breakout I was looking for. Bullish breakout would have had to see some bullish candles probably break above this resistance level or the weekly pivot point probably for that breakout to the R1, which never happened. Regarding the moving averages, I'm not surprised that there's some 200 EMA here. 144, of course, is slightly above that. You can see that the 144 EMA is cutting through the price, which means that we are in a range like this. We can see that pretty clearly, which is one of the reasons why I was looking for downside at this resistance zone, which indeed happened, although it took a lot of time. And you can see that price, therefore, I think does have the space to fall towards these fibs. Whether it will get all the way to the bottom or deeper fibs remains to be seen, though. That does not necessarily have to happen. All right, Aussie, I talked about this one too yesterday. If we get a bullish candle, there could be a bigger correction. And it seems to be like we're getting a bounce on this, indeed. And in this case, price has divergence between the bottoms, which means that price can get back to the long-term moving average. Rather than trading it away from the moving averages, when strong divergence is present, there's an opportunity to trade it back to the long-term moving average. All right, this is all part of my roadmap, my analysis of the path of least resistance of price. Kiwi dollar, same thing. Divergence could get back to the long-term moving average. Dollar CAD breaking to the downside. Your odd, as I said, your odd is yesterday. I would be careful of downside still because this is looking choppy. This is looking impulsive, and I know that there are a lot of traders that might be, interested in trading this breakout and seeing this as head and shoulders. And I think it's a valid point. That's why I didn't trade it longs as yet, right? And I think actually it was a good short here. And we were trading alongs here. I was trading along here. I should say I was trading along here. I was trading along here. I think that a short here would have made sense. I didn't trade it because my internet was down at that point, but did make sense. And now I think I'm still in the waiting mode. I think with the Eurod, let me show you the moving averages. Wait, there we go. And you can see that price is still far from that 144 EMA. I think if it gets back above the 21 EMA, there could be a new breakout to the upside, in fact. There could also be a breakout back down to the long-term moving average. So it's an interesting spot, I think, that could see a potential up and downside. Uh, let's see how the triangle breaks. If the triangle breaks to the downside, we might get the move down to the long-term moving average. If it breaks above, we might get a continuation to the upside like this, away from the moving averages. I mean, this divergence here between these tops, don't forget, has already created some decent correction, and we don't have divergence between these tops. And this is pretty choppy. So I understand traders that are bearish. I do. But I think that it is better to be flexible and open to both sides at this moment. Also a continuation of this uptrend, specifically if it breaks above this resistance, in my view. And yes, there's always that risk, of course, that price could still make an expanded head and shoulders here. That's why some tight trade management is needed. Even if it breaks, if there's some reaction to that level and some engulfing twins here, I would have to exit that setup, that breakout, maybe with a small loss, because in that case, yes, there could be a bigger bearish correction. But I think to say this formation is 100% bearish, 100% reversal, well, I think I can see the reasons. It's just that I think reversals are too difficult to predict with such a precision, in my view at least. That's my experience. And I think we shouldn't underestimate the bullish momentum and the choppy correction like that, which could be a bullish momentum, bull flag continuation pattern. So I don't know if you have any follow-up questions, but this is my view at the moment. Now, pound New Zealand and pound dollar are a little bit different because I think the pound is reaching resistance to pound dollars. And I talked about the fact that pound New Zealand could make a bigger correction downwards too. For instance, it broke the rising wedge. We were looking at it yesterday. I said here at this spot, it's not that good. Just wait for today's candle because it probably will not have much to travel. And if it does move lower, it just confirms more potential downside today. And it didn't go anywhere really after that. Indeed, it broke this rising wedge and kind of went sideways like this. Daily candle did close bearishly, and I think there could be a bigger reversal potential possible. For the moment, I'm still on the sidelines. I don't think it's a very high probability setup, but if it does break support in here, there could be a bigger correction. So is this a high probability setup? It's okay. It's not high probability because I think we're trading basically in between these moving averages, which is always a little bit more difficult in my view. Same for the pound odd. And as I said, with the euro odd and euro New Zealand, I'm even more careful with downside because these structures looking more bullish to me in my view. And the euro pound is at this moment kind of in a bouncing spot. So yeah, let's take a look at some of the others here. Odd yen is something that I was looking to short too, and it is continuing. These are high probability setups because of the fact that we're having corrective patterns, we're in a downtrend, good momentum, prices retracing back to moving averages. The moving averages are bearishly aligned. We don't see that here, but believe me, they are. There you go, you can see it, you see, bearishly aligned. So when price makes a corrective pattern like that, back to the moving averages, in a downtrend with momentum. If it then breaks that pattern, it breaks that channel, those are typically pretty decent probability setups. All right, and the New Zealand yen and AUD yen had that today. Yeah, good question, Dushan. Good to see you here too, by the way. And I think you're right, indeed. It's I think that's yeah, not just thinking about my trades this week. I think you're right, indeed. I mean, generally speaking, maybe a bit slower. Definitely compared to like 3, 4 weeks ago, it was really moving a lot. And more importantly, maybe there's not a strong trend as yet. I mean, the yen strength, right? Dollar yen moving down and stuff like that is probably one of the most prominent ones. Now, CAD is strengthening as well. So yeah, I think there is something to say about that. It's a feeling that I have as well. I think, yeah. Let's see, gold. Yeah, so indeed did take that bounce, right? We were talking about it, I think, yesterday here. This candle. I'm not sure if this candle was closed. Maybe not. Eventually, it did close bullish. Bit of a retracement here and continuation. We talked about the potential upside because of the fact that it could easily bounce again here and reach the top of this channel. For the moment, it's close to the top of the channel. I agree. I think this needs to be refreshed. 1 second. Yes. I am bullish for this instrument up to these levels right in here. That's what I'm looking for. That could be a big resistance spot, and we could finish an ABC correction like that. It could be a flag. It's just that the bigger picture overrides that a little bit, in the sense that I think that this could be an ABC. However, price does not have to get up to the 5061.8 fib. I should add, it could stop because we had a higher low. We could also have a higher low and still have an ABC like this. In fact, maybe even expand into ABCDE and then break to the downside. This being wave A, this is B, this is C. Those are very valid options as well. So definitely this could be a channel that does not break. Price respects the resistance, turns here, and then flies lower. The confirmation of the bear flag is the break below the bear flag. So I agree with you, ZT, that price could stop at the top, but if it does break, I'm not bullish. That's my point. Despite the fact that it could be breaking this bear flag to the upside, because of these resistance levels, I still see strong resistance there, and I think the price will turn there for an expansion of this correction. So from my point of view, bounces here, 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 here are all possible, and breakout here. Here, there was a bullish setup at the bottom, but not now anymore. That was yesterday. Whether this is a bear flag is a question. Technically speaking, we would like to see momentum and then a flag. Here we have momentum, but price has already retraced almost to the top. So from my perspective, now I'm really like diving into details, which I don't think is practically that important. But I therefore think it's more of a corrective pattern uh, than necessarily a bear flag. But it doesn't matter. It's a channel. It's a weak channel. It's a shallow channel, and it could easily act as a bear flag, be a bear flag. It really doesn't matter. If it breaks, it's a breakout to the downside, and the top still acts as a resistance. But a classical flag, in my view, is one that has a pull, good momentum, then has a corrective choppy price action that doesn't really go past the 50 fib. You might be saying, hey, but price didn't break above this 50 fib, but this was not part of the bear flag. And if we put a fib from here to here, it went above the bear 50 fib. So it is a bear flag kind of like type of pattern in a way, and I think it is a bear structure. However, I do think it is part of a bigger correction. The question is how far this kind of C part will go, in my view. So that's a very detailed answer. I don't, it's not that relevant from a practical point of view. It's kind of has the same practical kind of implications as a bear flag, anyhow. And it depends on the definitions you use and stuff like that too. So yeah, I think. Let me think for a second. I'm not sure if there's anything left. Yeah, we will basically, of course, other instruments. S&P 500 seems like it could make a bit of retracement there. Oil at double top at this moment. I'm not so sure about this Facebook. It is maybe better to wait for a correction here, I would say, to get a little bit more info, is my view, when looking at this, reading this chart. Probably for Google too. Just, of course, one of the few, only one of the many CFDs available. So that's something you could look at yourself, of course, easily. Just click on, let's see, there we go. CFDs, US, CFDs, EU. Many more available there, just looking at a few. And let's take a look at, I want to take a look at, where is it? Trying to look for DAX. Can't see it for the moment. Let me add it. Yeah, wrong one, sorry. Again, the wrong one. There we go. DAX making some bearish correction. It could be because of the fundamentals a bit. Coalition talks in Germany are not going as smoothly as probably expected beforehand, with a potential, as far as I read yesterday at least, potential for new elections. That hasn't been decided as yet, but the current kind of formations don't seem to be working out. It doesn't seem likely that a minority government will be made. So it could be a bit tough, and to form a government, maybe new elections coming up. This could have maybe created some of this downside. Who knows? But for the moment, some bearish momentum seems like bullish correction for the moment, and might see correction down to 1260 here, 1250, like a this kind of correction. That's what pops in my mind, at least for the moment. All right, so those are some of the other instruments. Quick look on those. All right, so anyhow, moving averages, to wrap it up, moving averages is very useful with identifying break or bounce spots, I think. Good info there, and gives a lot of info with regard to understanding the path of least resistance, the price roadmap in a way. And I think with regard to the current roadmap that pound out, pound New Zealand might get some bearish correction if it breaks through support. Euro, Audio, New Zealand might get those too, but they look a little bit more bullish as well. So I'm looking at both breakout potentials there for the moment. Still not taking any decisions on those, but I can see, how those could continue too, rather than reverse, as I said already. Yens are moving lower, although Euro yen, pound yen do have support nearby. CAD seems to be strengthening. Dollar CAD moving down. Aussie Kiwi looking at a bigger bounces to the upside at this moment. Dollar yen, today's candle could be important. Pound dollar near resistance. Euro dollar nicely moving up at the moment. I think that this could still be a new setup, maybe if there's some a bull flag and continuation or something like that. But yeah, for the moment, this is pushing up, which is good for me at this point. So well, that wraps it up, I guess, for today. You got more webinars coming up tomorrow. We're going to take a look at equities and CFDs, Ned and I together. And next week we got the usual schedule. You can find out basically through admiralmarkets.com/education/webinars. And if you're looking for more info with regard to that plugin, Supreme Edition plugin, 60 extra plus features. One of those is the Keltner channel. Plus, it has that 21 EMA in the middle, which I think is quite useful. So you have two tools in one in a way. You can do that right here. Go to platforms and click on this button, Supreme Edition, to download it, free download. And that wraps it up for today. Looking forward to see you tomorrow. Wish you all very good trading and talk soon. Cheers.